Earlier this month, the Reserve Bank of India increased risk weights on consumer loans from banks, non-banking finance companies, and credit card providers. What is risk weight, you ask? Risk weight is essentially a function of the risk perception the Apex Bank has on loans for different sectors. It applies to all categories of retail loans such as personal, home, car, and education loans, as well as corporate lending. Risk weight is capital or the amount required to be set aside by institutions stipulated by the RBI for giving loans, which is depicted in terms of the percentage of loans disbursed. The central bank increased the risk weights by 25 percentage points to 125%. This means that earlier banks needed to maintain capital of 9 rupees for every 100 rupees they loaned, but now they will have to keep 11.25 rupees. The hike in risk weight implies that banks and NBFCs will need to set aside a higher amount of capital for these loans, leading to an increase in the cost of capital. The adjustment applies to both existing and new loans. However, it excludes housing, education, vehicle, and loans secured by gold and gold jewelry, and also microfinance loans. Typically, commercial banks and non-banking financial companies or NBFCs face a risk weight of 100% for loan exposures. A hike in risk weights may lead to higher interest rates and reduced access to credit for consumers as banks adjust lending practices to meet increased capital requirements. This could impact borrowing costs, which means taking loans will become more expensive, leading to a limited availability of loans. Brokerage firms say the new move will increase the cost of personal loans and credit cards and may curb growth in these categories. On average, unsecured retail loans have seen a year-on-year growth of 23%, significantly higher than credit growth in other segments, which is 12 to 14%. Thus, this has been a cause of concern for the RBI and has also been highlighted by the regulator in the past few months. The central bank reverses risk weights for a loan category when it perceives that the risk attached to that category has elevated. Back in 2005, the regulator had raised the risk weight on banks' exposure to the capital market and the real estate sector by 25 percentage points to 125%. In 2019, the RBI reduced the risk weighting on consumer loans such as personal loans from 125% to 100%. In October 2020, the RBI rationalized the risk weight norms for retail housing loans, taking into account the criticality of the real estate sector in economic recovery.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.